Every 80 years, the U.S. economy resets. Not a recession. Not a correction. A complete systemic collapse and restructuring. And if history is right, 2026 is the year it happens again. Think about that for a second. 1786. Post-revolutionary debt crisis. 1866. Post-Civil War financial panic. 1946. Post-World War II restructuring. And now? 2026. The pattern isn't random. It's mathematical. Economists call it the Kondratiev Wave, a 50 to 80-year cycle that moves through 4 phases: spring, summer, autumn, and winter. We are deep in winter right now. And multiple cycles, the debt supercycle, the generational crisis cycle, and the long wave are all converging on the same 5-year window, 2022 to 2027. Within that window, the most probable flashpoint is 2026. So is this conspiracy theory? Or is the U.S. economy actually programmed to collapse on schedule? Today, we're going to connect the dots. By the end of this video, you'll understand why 2026 isn't just another year, it's the algorithmic reset point built into the structure of modern capitalism. Let's start with the cycle that nobody talks about, the Kondratiev Wave. Russian economist Nikolai Kondratiev discovered in the 1920s that capitalist economies move in long waves, lasting 40 to 60 years, some estimates extend to 80 years. Each wave has 4 seasons. Spring is recovery and growth. Summer is prosperity and expansion. Autumn is stagnation and speculation. Winter is collapse and deflation. Since the 18th century, economists have identified 5 complete Kondratiev waves. The first wave ran from 1780 to 1830, driven by the steam engine and industrialization. The second wave, 1830 to 1880, was powered by railroads and steel. The third wave, 1880 to 1930, brought electricity and chemicals. The fourth wave, 1930 to 1980, was oil and automobiles. And the fifth wave, 1980 to today, information technology and the internet. And now, according to the cycle, we are at the end of the 5th wave, the winter phase, the collapse phase. The last major autumn to winter transition occurred in the late 1960s and early 1970s. Nixon took the U.S. off the gold standard in 1971. Oil shocks. Stagflation. The Bretton Woods system collapsed. That was the last reset. 55 years later, 2026. But here's where it gets sinister. Because the Kondratiev Wave isn't the only cycle pointing to 2026, there are THREE overlapping cycles, all converging on the same window. First, the debt supercycle. This is a 70 to 80-year cycle where debt accumulation reaches unsustainable levels, triggering deleveraging and financial collapse. The last peak? 1930 to 1940, the Great Depression. At 80 years? 2010 to 2020. We're in the tail end of that cycle, right? Now, U.S. national debt is $35 trillion. That's 120% of GDP. Corporate debt is at record highs. Consumer debt, credit cards, auto loans, mortgages is maxed out. And when debt levels reach these extremes, the system doesn't slowly unwind. It breaks. Second, the generational crisis cycle. Sociologist William Strauss and historian Neil Howe identified an 80 to 90-year pattern where each generation faces a defining crisis. The Revolutionary War generation faced the crisis of 1776. The Civil War generation faced 1861. The World War II generation faced 1929 to 1945. And now? The Millennial and Gen Z generation faces 2020 to 2030. The pattern is consistent. Every 80 to 90 years. Society faces an existential threat that requires total restructuring of institutions, economies, and social contracts. The last crisis peaked in 1929 to 1933, the Great Depression. And 90 years? 2019 to 2023, COVID hit in 2020. We're already in the crisis window. Third, the Kondratiev Wave itself. Last peak in the late 1960s to early 1970s, add 50 to 60 years? 2020 to 2030. All 3 cycles, debt, generational, and long wave converge on the same 5-year window, 2022 to 2027. And within that window, the highest probability flashpoint is 2026. So let's talk about what the data is showing for 2026. Morgan Stanley predicts U.S. GDP growth will slow to 1.8% in 2026. down from 2.5% in 2025. Unemployment will peak at 4.7% in the second quarter before easing to 4.5% by year-end. That's not catastrophic, but it's weak. JP Morgan expects growth to pick up to 3% in the first half of 2026, driven by tax refunds and fiscal stimulus, then slow to 1% to 2% in the second half as stimulus fades. They're forecasting only 50,000 new jobs per month. That's borderline recessionary. Deloitte has a baseline scenario where the economy stumbles briefly in 2026, with GDP growth falling to 1.4% down from 1.8% in 2025. That's a deceleration. And the New York Fed's recession probability model? It puts the probability of a U.S. recession by October 2026 at 26.5%. That's 1 in 4 odds. But here's the trap. These forecasts assume normal conditions. They assume no black swan events, no geopolitical shocks, no financial contagion. But the cycle doesn't care about assumptions. The cycle says, when debt peaks, when generational crises converge, when the long wave hits, winter collapse is inevitable. So let's talk about the mechanism. How does the reset actually happen? Think of the economy like a forest. For 80 years, debt accumulates like dry wood. Interest rates stay low, credit expands, speculation runs wild. Companies borrow to buy back stock. Governments borrow to fund deficits. Consumers borrow to maintain lifestyles. But eventually, the debt load becomes unsustainable. Interest payments consume more and more of income. Defaults start to rise. Banks tighten lending. And when credit contracts, the economy stops. That's the spark. And once the fire starts, it spreads. Corporate bankruptcies trigger layoffs. Layoffs trigger consumer defaults. Consumer defaults trigger bank failures. Bank failures trigger panic. Panic triggers selling. Selling triggers crashes. And in a matter of months, sometimes weeks, the entire system collapses. This isn't theory. This is exactly what happened in 1929, 1866, and 1786. And it's what the cycle predicts will happen in 2026. But here's the chart I'm about to show you that changes everything. Because the reset isn't just about economic collapse. It's about restructuring. After the 1929 crash, the U.S. implemented the New Deal, Social Security, banking regulation, the SEC. The entire financial system was rebuilt from scratch. After the Civil War, the U.S. moved from an agricultural economy to an industrial powerhouse. The railroad boom, steel production, urbanization. A complete transformation. After the Revolutionary War, the U.S. created the Constitution, a federal government, and a new currency system. Total systemic redesign. So what happens after the 2026 reset? Economists and futurists are pointing to 3 possibilities. Central bank digital currencies. The U.S. government replaces the dollar with a programmable digital currency that allows for total control of spending, taxation, and monetary policy. Universal basic income. As AI and automation displace millions of workers, governments implement UBI to maintain social stability and consumer spending. Debt jubilee. The U.S. government unable to service $35 trillion in debt. Defaults or restructures wiping out creditors but freeing the economy from the debt burden. Any of these would represent a complete restructuring of the economic system. And all of them require a crisis to justify their implementation. That's the algorithmic reset. The system is designed to collapse every 80 years so it can be rebuilt in a new form. But here's the timeline that should terrify you. We're 18 months away. If the cycle is correct, the trigger event will happen between now and late 2026. It could be a stock market crash, a sovereign debt default, a banking crisis, a geopolitical war. The exact trigger doesn't matter. What matters is that the conditions are set. Debt is at record levels. Asset prices are inflated. Consumer confidence is falling. Institutions are pulling out of risk assets. And the Federal Reserve is trapped, unable to cut rates without reigniting inflation, unable to raise rates without triggering recession. So let's zoom out and show you the big picture. The 80-year cycle isn't a prediction, it's a pattern. And patterns exist because human behavior is predictable. Every generation forgets the lessons of the last crisis. Every generation rebuilds the same debt structures. Every generation believes this time is different, but it never is. 1786. Debt crisis after Revolutionary War. 1866. Financial panic after Civil War, 1946. Restructuring after World War II. And now, 2026. The math doesn't lie. The cycle doesn't care about optimism or denial. It just repeats. And the scariest part? Most people won't see it coming. Because the media will tell them the economy is recovering. Analysts will forecast moderate growth. Politicians will promise stability. But the cycle says, when three overlapping waves converge, debt, generational, and long wave, the reset is unavoidable. So let me ask you this. Are you watching the cycle or are you ignoring it? Because history shows that those who understand the pattern prepare. They move out of overvalued assets. They hold cash or hard assets. They position themselves to survive the collapse and capitalize on the restructuring. But those who ignore the cycle, they get wiped out. Their portfolios collapse. Their savings evaporate. And by the time they realize what's happening, it's too late. The 80-year algorithm isn't a conspiracy. It's a mathematical certainty. And if the pattern holds, 2026 is the year the US economy resets. So here asks the real question. Do you understand the algorithm or are you just another data point in someone else's cycle?